This channel is all about cycles, so try this on for size. We have a virus or new variant. Then we see the surging cases. That causes lockdowns or further restrictions, and then we get a vaccine or booster for a bit of hope. And that leads to the slight reopen. And then a new variant makes a convenient appearance just in time to lower oil and gas prices and dampen the roaring inflation. If one is paying attention, the cycle is not hard to observe. And the story plays out with plunging stocks as global markets are rattled by a new coronavirus variant discovered in South Africa. And of course, the reaction is compounded by the low stock trading volume over the holiday that exacerbates the volatility. Surprisingly, the brain-dead mainstream media has also picked up on the cycle. But with a trained population, might as well come out with the truth. There you have it. The Dow dove by more than 900 points, logging its worst day of the year and its third worst Thanksgiving sell-off ever. Meanwhile, the S&P 500 sank by over 2%, its biggest drop since February, and the Nasdaq also fell sharply, but its losses were partly contained by a rally in stay-at-home stocks. And though it's still too early to say exactly how big a threat the new B11529 strain poses to the economy, we can turn to the charts for some perspective. And today we're going to take a look at one chart, which is the 1-year daily chart on the spiders, the SPY, and the close on Friday was 458.97. So we're going to continue from last week where we were taking a look at this move here from that bottom up to this top, the small pullback down to here, the next run, which did exceed that previous top up here, and then it came on down and did kind of a W before it started on its way again. Now, same sort of thing, the bottom up here to the top, small pullback. Now, this run here did not really exceed the previous high convincingly, but I don't think that's too much of a sign. We came on down here, and today we had the further pullback down to just above that 50 EMA. Now back here again, we hit the 50 EMA at that point, and then it looks like we might have picked it up a second time in that W. So I'm not sure if we're going to go through a W, if this is going to continue and maybe go through and below that 50 EMA, but I'm just looking at this particular pattern here as pretty much a playbook for what we're going through right now. So study this pattern here, and then we'll just see how the current moves through time and evolves. Down here into the volume, not going to tell us much. We did have a pickup in volume, and certainly today it was not actually low trading today, but that's the story. Move down here into the MAC once again from, say, this bottom here up to this top here and then down to this bottom here. That's the playbook I think we're going through right now. This was a little bit lower from that point there and maybe about the same height, so it was a much more extended move all the way through here. But I think more importantly, the process or evolution from that top on down so far is looking pretty close to what it did in this time frame here on the way down, this fast line moving through the slow line on the way down here. So watch that previous evolution to see what happens here. We still have plenty of elevation above the zero line, so there's still some strength, but things can plunge when you get that stock market gravity from these heights. So right now I'm still sticking with the thesis that we're going to be okay and this is going to be a garden variety pullback, but we'll watch it evolve. Moving there into the histogram, you can see pretty much the same thing. We had a pretty high level here, came on down, and it was only slightly below that zero line, but of course today we took a pretty good plunge. So just keep your eye on that. One day in the market doesn't make a crash. Now into the price rate of change, we can see this was a pretty heavy downside trade here, but we had a significant one at that point there. Now I'm not quite sure we're in the same point of the evolution of this cycle, but we'll just have to wait and see. Right now I don't see any signs of a crash. I just see a pretty nasty little pullback. And there into the relative strength, we're at a moderately weak 32.17 at this level here. Back here we came down to that same level, more or less, so we're getting close. Into the stochastics, again, looks pretty similar as it did back there in that May time frame. And then of course the Williams also looks pretty similar too. So back on up here to the price chart, just keep watching this previous pattern here to see what might foretell in this particular pattern that we're moving through right now. But once again, I don't see any crash, at least at this point in time. I think the greater probability is just simply a nasty little correction or pullback. So let's just watch. Next week is going to be very important in the evolution. I would say that we're still going to have some more downside. Back here to the MAC, you can see that we definitely have some more downside in the MAC. So that to me is the primary oscillator, at least at this point. Until we come on down here, this was say at a level of about 1 or so. Let's just see this fast line move on down here below 2. Hopefully we stay above that 0 line. But that's going to be the telltale sign for me, depending upon how far that fast line comes on down through here. So that's going to be into next week, possibly the following week. So keep your eyes out, and for today, that's ChewDog Charts. Thank you.